But the stock of the day is in the bigger end of town, let's say safely, and it is the ASX because it has come out this morning saying that it's completed its reassessment of the CHESS replacement project. So you know that this has been just a thorn in the ASX's side and many of its stakeholders as well, to be honest, who've spent millions of dollars for something that is yet to eventuate. So ASX saying that it has decided to proceed with a product-based solution to be delivered by a global tech provider, Tata Consultancy Services. The project will now move to the next phase of the detailed design and implementation process, with the first release estimated to cost between $105 and $125 million. That's on top of what's already been spent, let's be clear. Further stakeholder consultation over the beleaguered project will begin in the first quarter of 2024, with the indicative time frame for the first release 2026. ASIC has responded saying that it is a foundational step in getting the CHESS replacement program back on track. ASX says that it will, and ASIC saying that it will need to ensure the existing CHESS system continues to operate securely and with integrity. Right, let's get a view from both of my guests on the ASX. I'm going to start with you on this one, Gaurav. So, look, it is a market stalwart, pretty much a monopoly, but it has really bungled this CHESS project, which is a massive capex drain on the company.
Yep, it's been a huge disaster for the business, and on top of that, you can count some cyclical issues as well affecting the business. There's certainly fewer IPOs. M&A is taking away from the number of stocks listed, and those listing fees are a really important part of the revenue stream of the business. I haven't seen the chart for a while, but geez, that's quite instructive, isn't it? Let's remind everyone, this is a blue chip monopoly. It's not the kind of price action we're used to seeing from what everyone roundly agrees is a high quality business. And there's two lessons to take from that. One is that valuation always matters and that you can pay too high a price even for the best quality business. And the second is that every business goes through its troubles, no matter how strong its moat, no matter how impregnable it appears, problems happen. And ASX is going through one now. The price does look appealing. The margins have halved in this business, the returns have halved over the last few years, and a lot of that has to do with the cyclicality and the specific project problems that the company is going through. If you believe that that's going to pass, and I think there's good reason to think that, because the fundamental competitive position of the business remains strong. If it can restore its prior margins or get close to them, really, without even touching them, I think there's value on offer. I'm too chicken to jump in at this stage and buy, because we've been disappointed with this. We haven't owned it for a long time, and we've hesitated about buying it just because it seems to be a bit of a chaos boat at the moment internally, and I just wanted to see a bit more stability from this project side of things. And so I am happy to give up some returns to do that. It's not the kind of business going to rock your socks, but it is a high quality business. I think it remains one, deeply unloved. I'm happy to hold it right now. Braver investors might be compelled to nibble at it, and I don't think that's a bad decision at all. But for me, I'm happy to hold.
Okay, got it. Thank you, Gaurav. Daniel, do you see it any differently? I mean, could there be further consolidation in the big, exchange space? Could there be a foreign buyer? We've got SIBO, of course, Australia here as well, muscling its way or trying to into the scene.
Yeah, look, I think that's always been a bit of a call out or a bit of an attraction point, the takeover appeal and the quality of its assets. And, we've owned the stock for a long time, and we rode it all the way up during the speculation boom of 21, 22, and we've unfortunately rode it all the way back down to these levels. So, we'd certainly be happy with the hold. We're not playing it for that takeover thesis at all. I think the way we're viewing the stock, similar to Gaurav, is that we've done the work. We understand now the issues that they're having on a top line level. So from a revenue point of view, those cyclical factors that Gaurav's mentioned, it's IPO volumes, which are a pretty big swing factor in terms of top line growth and profits because it's high margin. And the second thing is also the volumes, not only on equity volumes, but over the market, over the counter securities and interest rate speculation as well, which is a pretty big volume drive for the ASX. And those have really been a little bit dim, perhaps with the interest rate expectation changing story in the US that could bring back a bit of volume. We'll have to wait and see that volume story. But all in all, it probably just does come back to a bit of a valuation story here. And I think the fact that this morning's announcement, it actually just showed the change in strategy. So previously, the prior management team wanted to build that blockchain program out and manage the CHESS program. The big key difference here, not only the type of technology that they're wanting to use, but the key differences here is now that they're partnering with a global IT partner who will actually help design and build it for them. So I don't think the ASX is going to own the IP and incur those development costs, which means it shouldn't be as costly, and they're working with a partner. But the trade-off to that is that they won't be owning the infrastructure or the IP. I think that's what the announcement is kind of guiding to, and potentially that's the right thing to do at this point in time, because they'd have so much heightened scrutiny on them from the regulators as well. So we actually think it's a relatively positive step in terms of management direction, and the stock is up low percentage points today, so perhaps the market agrees with that. But yeah, we're certainly watching it quite closely, but similar to Gaurav, probably just happy with a hold here. I don't think there's enough in terms of underlying tailwinds to generate a buy idea on this stock at the moment, but it does look relatively attractive from a hold point of view.
Thank you, guys.
I tell you what, though, I reckon the fact that we both kind of like the business but are too chicken to stick our necks out on it probably tells you now is the right time to buy. I always think that a stock that has that ick factor that you don't want to touch and that you just look like an idiot if you buy it now and you're wrong again, those are often good ideas. So the setup here is pretty good, but that doesn't change my view. I'm still too chicken.
Yeah, once bitten, twice shy is I think what we say. All right, guys, thanks for that.